All right, folks, Logan Alec here, and if you've watched any of the stock market videos on my channel, you know that I'm a big fan of passive index fund investing. I don't like picking stocks. I don't like to have my eyes glued to the market every day wondering how my stocks are doing. I just like investing in index funds, and if you don't know what index funds are, check out my Investing for Beginners video, link at the top of the screen, as well as in the description below. But other people have a different investment philosophy. Other people think that in the long run, they're picking a handful of stocks, maybe a dozen or a couple dozen stocks or something that they've researched and vetted, that they can beat the market, that they can beat the performance of an index fund that simply tracks the stock market as a whole. There are a lot of YouTubers who like picking stocks and sharing stocks with their channel. And you know what? More power to them. That's a hustle. That's a grind. People enjoy consuming that content. So I'm not going to run this little exercise that I'm going to show you in this video on other YouTuber stock picks, okay? But I have absolutely no qualms with doing this for perhaps one of the most well-known stock picking companies in the United States, and that is the Motley Fool. I've heard about this company for a long time. I've known people who really like their stock picks. If you go to their website, right, on their homepage, you'll see that they claim that as of right now, they've beaten the S&P 500 by leaps and bounds since the Motley Fool Stock Advisor launched in February 2002. I personally haven't dug into that math. Maybe I will do so when I do a full-on review of Motley Fool Stock Advisor after I have more experience with it. Anyway, what did I do? I signed myself up for a Motley Fool Stock Advisor account and got access to their stock picks. They're recommending 11 stocks right now. Okay, I'm not going to give away their stock picks. That's their business. That's their proprietary information and research that they charge people money for. Okay, so I'm not going to give away their stock picks. That said, if you want to see what they are, I do have an affiliate link to the Motley Fool Stock Advisor in the description below. It's $99 a year. I believe they have a 30-day refund policy. So anyway, you log into your Motley Fool Stock Advisor backend, and you basically see all the stock picks right now. These are all the stocks that they're saying you should buy today. And this is not a recommendation or endorsement of the Motley Fool, by the way. This video is not sponsored by the Motley Fool. They don't even know that I'm doing this. But all I'm saying is if you do want to see what these Motley Fool picks are and follow along with me in this experiment, I'd love it if you support the channel and use my link to the Motley Fool Stock Advisor in the description below. Anyway, last week I opened up a new account in Fidelity. I transferred some cash over to that new account from my main Fidelity brokerage account. And during the last 10 minutes the market was open last Friday, I bought approximately $1,000 worth of each of the Motley Fool's current stock picks. It wasn't $1,000 even in each stock. Okay, if the share price was, say, $350, for example, I'd buy 3 shares. That would come out to $1,050, obviously. Fidelity does offer fractional shares of money stocks. It's what they call stocks by the slice, but not all of Motley Fool stock picks are eligible for fractional share trading. So because I couldn't go that route, I figured the most natural way for me to do this would just be to buy whole shares in each of the stocks whose value at the time of purchase, would approximate $1,000 each, right? $1,000 in each stock. Also, side note, those of you who have seen my M1 Finance review might be thinking, Logan, you love M1 Finance. It seems like the perfect experiment to do in M1 Finance. Why didn't you just do this in M1 Finance? And the answer is because not all of the Motley Fool stock picks are eligible for fractional share trading. And so therefore, some of these stocks, I couldn't even buy them in M1 Finance in the first place. So that's why I'm using Fidelity here. And like I said previously, that's the same reason I simply just didn't buy $1,000 each of all these shares equally through fractional shares at Fidelity, because some of these stocks are not eligible for fractional shares. Anyway, if you add up all my purchases and all these stocks that I made last Friday, their cost basis, that's the amount I actually invested in these stocks, my total cost basis came out to $11,493.09. So back in my main Fidelity account, I bought that exact same dollar amount of the Fidelity Total Market Index Fund. This is a total U.S. stock market index fund that seeks to provide investment returns that correspond to the total return of a broad range of U.S. stocks. The expense ratio on this index fund is very low, 0.015%. I like that. Fidelity does have a free total market index fund, which is called the Fidelity Zero Total Market Index Fund. I'm invested in that one as well. But actually, the Fidelity Total Market Index Fund, which has that small expense ratio, has recently been outperforming the Fidelity Index Fund with no expense ratio by an amount greater than the expense ratio. And these two index funds are actually quite different. The Fidelity Total Market Index Fund, that's the one that does have the small expense ratio, it has about 3,500 holdings. Okay, while the Fidelity Zero Total Stock Market Index Fund, that's the one with no expense ratio, only has about 2,400. Okay, so the Fidelity Total Market Index Fund actually gives you exposure to about 45% more stocks than the Fidelity Zero Total Stock Market Index Fund. And when I invest in a total stock market index fund, I really want to invest in something that approximates the return, of the total stock market, right, as closely as possible. That's why I went with the Fidelity Total Market Index Fund here. I'm not saying the zero one is bad or anything like that. I do have some money in the zero fund, but for reasons stated above, I simply chose the Fidelity Total Market Index Fund for this experiment. And in fact, back in 2019, the zero fund outperformed the other fund. Okay, so I probably spent a little too much time in this video already comparing these two funds. I don't want you to get analysis paralysis here, right? Just invest. That's my point. Anyway, back to my experiment. So my experiment here is to compare over the long run, and I'll give periodic updates on this channel. My experiment is to compare the performance of the Motley Fool stock picks versus the plain vanilla Fidelity Total U.S. Stock Market Index Fund, and to see who wins over time. And whenever Motley Fool makes a new stock pick, I will buy approximately $1,000 worth of that stock pick, and also buy the exact same amount of the Fidelity Total Market Index Fund. And when Motley Fool says to sell a stock, I'll sell that stock and reinvest the proceeds as equally as possible into the remaining stocks in the Motley Fool portfolio. I suppose I should calculate the tax effects of all this as well, because obviously in the Motley Fool portfolio, I'll have more tax drag, right, from selling stocks when Motley Fool says to sell. Well, I won't have as much tax drag with the index fund because I'm not going to sell my shares in the index fund. So I imagine I'll have to put a spreadsheet together to track the tax effects as well. But yeah, that's what I'm going to be doing. I just wanted to fill you in on that. In the comments below, let me know your thoughts on this little experiment I'm doing. Also on the next screen, you'll see links to other investing videos I've put together for you. So I'll see you over in those videos.